Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Today onwards, you'll start paying 1% TDS on transfer of virtual digital assets. That's crypto. But VDA is how government defines it. And luckily, we have the clear definition also of VDA. We'll discuss that, and along with that, we'll also talk about this 1% TDS that you'll start paying from today. I'm Arun Singh. The show is called Coffee and Crypto. We'll begin with big stories of the week. The TDS rule has come in force from today, that is July 1st, for transactions of more than 10,000 rupees. The move comes after the imposition of 30% flat income tax on cryptocurrencies from 1st April 2022. However, an investor would be able to claim refund of TDS levied on transactions involving losses. We'll talk about that with our tax expert. Now, moving on to the next story. According to a government notification, gift cards, coupons and reward points will not be considered as virtual digital assets and will not fall under the steep 1% TDS category. Thankfully, we now have clear definition of VDAs, which I'll be telling a little later. Moving on, the European Union has finalized rules for tracing transfers of crypto assets. The legislation is part of the new EU anti-money laundering package and will be aligned with the MiCA rules, that's market in crypto asset rules. The last story, Russian lawmakers on Tuesday approved a draft law that would potentially exempt issuers of digital assets and cryptocurrencies from value-added tax. In February, the regulator gave blockchain platform Atomize Russia the first license to exchange digital assets. And now we'll come back to our home, we'll come back to our country. What's happening? What's happening with the 1% TDS? Who will deduct it? I know we covered all of that in the last episode, but now, since it is starting from today, we'll take a deep dive and we'll also have a tax expert decode all of that. And for that, we'll go to our coffee wall. Let's go. From today, you'll have to pay 1% TDS on transfer of virtual digital assets as per a new income tax section 194S, introduced in the Finance Act 2022. The TDS is required to be made at the time the buyer makes the payment to the seller. In its previous circular, dated 22nd June, the Central Board of Direct Taxes, that's CBDT, made it clear that onus of withholding TDS will be on the buyer, exchange or broker. Now, what is the update? The CBDT had recently issued guidelines with respect to the new section 194S. Now, there are some FAQs that might be there in your mind. We'll be answering all of that. First is, who will cut the TDS? In a peer-to-peer transaction, the buyer, that is the person paying the consideration, is required to deduct tax under section 194S of the Act. But if this transaction is between an exchange and buyer would be crediting or making payment to the exchange directly or through a broker. Now, the consideration for transfer of VDA shall be on gross basis after including GST or commission, or it shall be on net basis after exclusion of these items. Well, the answer to that is it will be on the net consideration after excluding GST or charges levied by the deductor for rendering the service. Now, in clause 47A, added to the Income Tax Act, VDA has also been defined, and as Aki's right in the opening, that now we have a clear definition of VDA, because while the budget session was announced, there was mention of VDA, but there wasn't any clear definition. Now we have that. It's defined as any information, code, number or token formed using cryptography or other techniques and excludes Indian or any other foreign currency. Non-fungible tokens and any others that fit the same description are also included in this. Now, this is my part. We have to have a tax lawyer to decode all of this or discuss or take a deep dive. We have with us Sachin Jolly, partner DMD Advocates. He's a tax lawyer. A very warm welcome, Mr. Jolly. First question is this 1% TDS. I have seen several exchanges decode this for their customers. How is this calculated, if you can tell us in a layman's language?
Well, let me take an example, and I think that's the best way to explain it. Let's say the value of transaction is about 200 Indian rupees. The exchange levies a commission of 1 rupee. There is a GST of 3 rupees. And these are all hypothetical numbers because the GST Council may come out with a higher number now.
Sure.
So 200 minus 4, which is 200 minus 1 as the exchange commission, minus 3 as the GST. 196 is the value of transaction on which 1% GST will be levied. So the buyer will have to deduct 1.96 rupees and pay it over to the government from the money that is remitting either to the exchange or to the seller directly, whatever the case may be.
Right, so that's how it will be calculated. Now, I also mentioned in our links, that an investor would be able to claim refund of TDS levied on transaction, but the ones which involve losses. What's that?
So again, let's take an example to, let's say I go and buy a Bitcoin. The value was $30,000 US. Today it's fallen to about 18,000 US dollars. Sure. So if I go and sell it today, the TDS is on the gross value of the transaction amount minus the GST or the commission, but the 1% TDS will be on the 17,000 value of the transaction, and that will then be paid on to the government. But when the recipient or the seller, as the case may be, files its income tax return, it will say, look, I purchased the asset for $30,000. I have sold it for $17,000. There is a loss of $13,000. So there was really no tax on this because the tax of 30%, like you said, is only on the income or the profit that you make. So the TDS which was deducted from the consideration will now have to be refunded. This is like any other situation where a businessman receives, or a lawyer for that matter, let's say, receives consideration for his professional services. There is a TDS on that. But ultimately, if the overall tax liability of the lawyer or the businessman is less than the TDS amount, then the balance gets refunded. That's how the provisions work.
And Mr. Jolly, in our last episode, we tried to decode the circular, which was quite long, I must say, and it had several points. But according to you, did they miss anything? Is there any gray area? Are there any questions still unanswered? Because you are a tax expert. Is there any gray area which is left?
Look, it's a new provision. It'll have its own teething problems. It's almost impossible to visualize all kind of situations and put it in a circular. Let's give the government some leeway.
Let's cut them some slack, sure.
Yeah. But I think one aspect which I believe I didn't see in the circular, and I think which is going to be a challenge in the future, and a guidance will be helpful, is when there is migration from one exchange to the other. That really is not a transfer or a sale. It is not an exchange either. What happens then? The circular addresses aspects of a direct sale, an indirect sale, an exchange, but it does not address the aspect of migration. Let's say, the Bitcoin or the asset, any VDA for that matter, is listed on an Indian exchange and it is migrated to a foreign exchange. What happens then? And will the foreign exchanges be subject to this withholding tax?
Right.
I think that's the second question. These are all aspects which are open today. Some clarity on that will always be helpful, especially for people who want to comply. I mean, see, there are rogue elements which will never comply, but people who want to comply, I think maybe in the next circular, some more guidance in the future.
Sure. I hope someone from the authorities is listening to you and watching this show, and this reaches them. Thank you so very much for decoding all of that in such a simple manner. And now we'll have a look at the markets. I mean, what's happening there? See, crypto hedge fund Three Arrows Capital fell into liquidation, and Bitcoin slipped briefly below $19,000. The global cryptocurrency market cap fell to $870 billion, decreasing more than 2%. And we have been seeing this quite often now. You had Terra first, then Celsius, then US Fed rate hike, and The latest is this 3 Arrows Capital. Now, there are growing worries about recession. Stability of the crypto sector is also being questioned. How does one handle this turbulence? We'll go to our experts, and they have 3 points each for you to probably have a strategy. This is in no way a financial advice, but this is a better way to handle the turbulence. We have with us Pranav Sharma, founding partner, Woodstock Fund, a fund that invests in early stage of blockchain startups. And we also have Rohas Nagpal, chief blockchain architect of Hi-Fi Blockchain. But we'll come to each one of you individually. We'll begin with Pranav. Pranav, what is your 3-point guide?
So thank you very much, Arun. I think so. First thing is what happened with 3 Arrow Capital is essentially a testimony that excess leverage and I think being ahead of the market and market underlying being extremely volatile can actually be a big challenge in many ways. So let's say when every individual is looking at participating in a market, and as any market has its own characteristic. The first point is always about that markets are always cyclical. So there are bull markets, there are bear markets, and there are always consolidation, that happens in the markets. So focus on value, focus on solid companies, protocols at the right price that continue to build. So the key word in double inverted quotes and double underline is build. Those projects, those protocols which are building are the ones which will create tremendous value, solving the right problems. There is also a lot of gunpowder which is waiting on the sides, which will invest when things bottom out. And as Aruni was hinting at, the macro is not supportive, whether it's 75 basis points or 100 basis points in the next 2-3 months. Only Fed will decide this. But having said that, as the pain continues, we'll see that the market at some point will bottom out. The second point is that, understand market dynamics. Don't try to time the markets. It's very important to understand the macro. It's very important to understand the Bitcoin. Bitcoin is still the dominant force in blockchain / crypto arena. So Bitcoin, Ethereum, and various others are extremely highly correlated. So understand the various cycles, halving, what's happening in terms of, various miners, what's the kind of stress they are experiencing at this point when it is sub $20,000. So the miners are even mentioning about Bitcoin touching even $12,000, etc. A lot of mid-sized miners are facing a lot of stress, and that usually is a bottom in many ways. The third thing is micro, which is basically looking at the underlying in terms of what problem is being solved, what's happening, etc. Under the hood in terms of these protocols and various technology stacks which are getting built. The third thing would be focus on governance. I think governance is something which was completely missed out in the previous cycle. I think the technology building blocks sort of came together. Liquidity pathways also came together. But I think the governance is what has been, in my opinion, the single most important theme which will emerge. Both governance in the context of financial institutions, which includes 3 Arrow Capital, for example, is also a question mark here about risk management, governance, etc. But also in terms of, can you focus a lot more on as an individual investor, let's say self-governance? Can you focus on being a lot more disciplined rather than focusing on timing the markets? Can you focus a lot more on, I'm just saying, taking some time off and, focusing on things which will give you a broader perspective on the markets? And invest in well-governed startups and protocols and funds, which are going to ensure that your principal is safe and is being managed very prudently.
Sure. So this was Pranav's 3-point guide for you to handle the turbulence that you are seeing in the market, which is markets are cyclical, then understand market dynamics, and then focus on governance. And now we go to Rohas. Rohas, which are your 3 points? Of course, in previous episodes, you told us Rohas' way of identifying great coins, good coins. But what are your 3 points for our viewers to handle the turbulence?
Sure. So point number 1 would be don't enter the market. So if you are new to crypto, this is not a good time to enter. I would say wait it out a little more. And in the meanwhile, you can get free cryptos from airdrops, as well as there are a lot of learn and earn schemes where you learn about a new crypto, watch a video, take a quiz, get something free. So that's a good way to get started without actually putting your money. Point number 2, do not short Bitcoin. I want to really emphasize right now everything may be looking gloomy. People are saying Bitcoin will fall below 10,000, 1,000, doesn't matter what they say. There is a term in the crypto market called being Ash Draked. It is named after an investor, a trader called Ash Drake. Many years ago, when he was shorting Bitcoin, he completely went bankrupt. Ever since that day, we have the term. So I would say no matter what you think, do not short Bitcoin.
So you would say it's still the largest cryptocurrency. So, it will give you returns as the market picks.
Well, it's a very difficult thing to predict Bitcoin. None of the logic ever applies there, and you could end up losing huge if you try to short it. And the third one is, of course, look for solid projects. Like, I'm very happy some of the really good projects are right now available at a very low cost. So you could look at them, but just remember one thing. The project has to have a solid use case or a solid revenue model. Like if someone asks you, what does the project do? And you give the answer, I can stake the token. That is not an answer. What does it do? How does it create revenue or generate an economic impact? If you cannot answer that question, that's not a solid use case. So to summarize, the 3 points are, if you are new, this is not a good time to enter. Second, do not short Bitcoin. And the third is look for solid projects.
So all of us have like 6 good points from both these gentlemen. Thank you so very much. And now we're taking a very short break. But Rojas, stay with us as you answer our crypto queries in our segment MCQ. That's my crypto queries. Those are essentially your queries. So don't go anywhere as your questions are being answered by Rojas himself. Stay with us. Hi, you're watching Coffee and Crypto. I'm Arun Singh, and now we have MCQ, that is my crypto queries, where you send in your queries related to cryptocurrency, and here we have an expert answering all those. We have with us Rojas Nagpal, Chief Blockchain Architect, Hybrid Finance Blockchain, that's Hi-Fi. First question is staking of Block Aura legit?
That's an interesting question. So I'm not sure from legit you meant legitimate as legally or financially. So let me answer both ways. So when it comes to the legal issues, staking any crypto is not a problem as long as you're complying with the KYC, anti-money laundering, and of course the taxation issues. So you can definitely stake any crypto. But from a financial point of view, there is something very important I need you to understand. When you stake crypto, what are you really doing? You're buying a certain number of tokens and locking them up somewhere. And against that, you are able to validate transactions. So in a proof of stake blockchain, that's what happens. Now, as a reward for this, you are given certain extra tokens, which may be 15, 20, 30, sometimes even 100% a year. But one thing which you have to understand is that you have locked your money. While you may get, say, 20% extra at the end of the year, what if during that 1 year, the price of that core token has fallen by 50 or 90% like what has happened? You will end up making a huge loss. So I want you all to understand this. Staking used to be a good option earlier. But now with the current crash, I would say stay away from staking, because while you may get some rewards, your overall capital investment may fall more than 90%, as has happened to many of the tokens today. So I hope that answers your question.
And if you've never heard of Block Aura, then it actually is a blockchain platform which is built to create smart contract for security tokens. It's how they actually define themselves on their platform. Next is Satnam's question. Will Luna coin be profitable in bull run? I just love how everybody's still obsessed with this and they have hopes from it. What is your answer, Rojas?
I don't think that project is going to ever get traction again. And the reason
even after the revival?
Absolutely. So even the revival has not solved the basic problem. What was the basic problem? This is an algorithmic stable coin. And you know, in previous shows also we've always discussed that algorithmic stable coins never made sense to us. So by seeing all the best of projects also today which have crashed over 90%, a project that has already failed spectacularly, I don't really think people are going to give it a second shot, because it has not solved any of its problems. It remains an algorithmic stable coin. Doesn't really solve any real world problem for us. So no, I don't think there is any scope. I know a lot of people have lost huge amounts of money. So they're obviously hoping that they can recover their money. But I think it's next to impossible for that project to get revived. And now, in fact, it's worse. It is not just that, you know, okay, it was some kind of a crash. Now it is being alleged that the founders of that project were actually committing frauds. And they have actually transferred huge amounts of money outside the country. And you know, it's a massive fraud, and now the regulators have started to investigate. They have even stopped the top management of the Terra project from leaving the country. So there are lots more things to come out in that. So I would strongly recommend to stay away from that project.
Sure. Now in the end, we have Rehan's question. Will TRX value increase in the future?
Very good question. Now TRX is the native token of Tron, which is one of the top 5 DeFi blockchains now. So after Terra crashed, Tron has moved into the top few. But I have a very basic question here. There are many blockchains available today, but not that many solid use cases running. So I think it is going to be very difficult for most blockchains to get enough business. So when we look at it today, when there is an Ethereum and a Binance Smart Chain, which are very mature and running for such a long time, what is the motivation for me as a developer to start building on Tron? Not so much. And if enough people don't build new projects or successful projects on Tron, the value of TRX obviously is not going to go back. So it is my strong opinion that no, I don't think, I'm not at all bullish on that project.
Sure, that's all the questions that we had from our viewers. But in the end, of course, I want to discuss my question that I'm going to ask you in the next episode in much more detail. But I'm asking about the Ethereum merge. Of course, it was much talked about, and now there are different kinds of reaction coming on the Grey Glacier upgrade. What are your quick thoughts on it? And we leave our viewers on that note.
Sure, excellent questions. So as you know, Grey Glacier came yesterday, and that is a hard fork to Ethereum, which makes a major upgrade. And it has achieved only one thing. It is pushing the difficulty bomb by 100 days. So effectively what it means is the merge is not coming now. It's going to be at least 100 more, or roughly 3.5 months later, because I'm presuming the tech is still not ready. And the project founders are obviously, they feel that if we go with the merge right now without the tech being totally sorted, it could completely crash ETH prices even more. So that's basically what the upgrade achieves. A further 3.5 month delay in the merge.
Sure, I still have some more questions, but of course I'll take those up when we discuss this in detail in our upcoming episodes. But thank you so very much, Rohas, for answering all our viewers' questions and taking this last question as well about the Ethereum merge as well. So everything that is trending in the crypto world is what we take up here. We decode it, discuss it with the experts, and we also take up your questions as well. Where else do you get such kind of luxury? Well, here, the destination is called Coffee and Crypto. I'm Arun Singh, but that's all the time that we had on this show. So goodbye from my side, but I'll be seeing you next Friday at 6:30 p.m. here on NDTV 24/7. Goodbye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.